First, wish you a very happy Diwali. So, what did you do on Wednesday? Were your children home?
Yeah, of course, being with the family
Yeah.
and enjoying the celebration.
So, your son
Let me
and
also wish all the viewers happy Diwali.
son and daughter, they both came this time to Diwali.
Yeah, sure. First time after last 3 years, we are all four of us together in the family.
Yeah, that's the idea of Diwali,
That's
Exactly,
right.
spending time with
So, what did you buy them as
yeah.
a Diwali gift?
Nothing. They all now buy on their own. You don't need to buy anything.
But when it
So-
comes to markets, I'm sure you're giving them a bit of advice. What are you telling them to do?
And again, this now young kids nowadays, they want to be on their own and they
Yeah.
want to take the decision on their own, and they decide what to buy and what to invest
Yeah.
and what to pursue. So they need very little advice from us, from their parents, so from myself
Sometimes
and
when
my wife.
when I hear this kind of a comment coming from someone who's got kids who are teens and in their 20s, I have a 7-year-old boy.
Yeah.
I just wonder, where parenting is headed going forward.
Yeah, but I'm sure y'all are filling their portfolios with adequate SIPs and stocks. So, to start off with, how are you looking at the environment right now in the markets? We can't help but harping on crude oil prices, and that I think is definitely going to be a game changer for our markets going forward. Do you think that the road ahead is veering towards some sort of stability, or do you think with elections looming large, that spark of volatility is definitely going to be the underlying factor?
Yeah, there's absolutely no doubt in the last 2-3 months the way the market got evolved, which was getting impacted by various variables such as oil price movement, the currency movement in India, as well as the global trade war. So all of them actually impacting the sentiment. To top it all, we also had issues around the non-banking financial services getting concerned. So I think the way I see is evolving is the worst seems to be getting over, and the global oil prices also seems to be now stabilizing at close to about $70. And there has been some kind of study which is carried out that which indicates that inventory levels globally has gone up, and therefore the kind of fear which was there earlier that the oil price will shoot up, that doesn't seem to be happening, and that's something which in my view is a positive. And second is whatever the last 2-3 months of liquidity crisis that we have seen in India and overall in the financial market, and they're also now getting addressed one by one with the intervention of government. And the government interventions, timely interventions, which also has been helping in getting the liquidity back. And Reserve Bank of India has also been reasonably active in terms of providing the liquidity in the systems through YMO and ensuring the interest rate doesn't shoot up in the short term, and which again essentially means money is being made available for the borrowers. And lastly, the proactive lending mechanism which is being carried out by the public sector banks, where there were concern about last 2.5 years whether the public sector banks would actually be aggressive in terms of their lending. And after a very, very long time, we are now seeing the corporate lending also seems to be coming back. And now I think some of the banks who have been essentially focusing on corporate lending, they seem to be coming back in terms of their lending activities. I think if you look at an overall basis, I think we seem to be at the bottom of the cycle. And any reaction that could come with respect to the oil, which is one of the biggest factor actually for India, and in turn the relative stability that can come for the currency, I think we will see, I think, the participation levels going up for the market.
I want to go back to that news on Bharti. Moody's, I mean, it's a very respectable and a very large rating company. They've come out with a view on Bharti's debt and they've downgraded, I think, to junk, right?
Yes.
Imagine Bharti getting a downgrade from Moody's.
They've not given it. They said maybe cut to
maybe
junk
cut
on
to
account
junk.
of
The thought.
intense competition.
The
Yes.
thought. It amazes me, right? It amazes me what's going on in the telecom sector. And even if Moody's is thinking on the lines that, Bharti's debt should be downgraded to junk, that just tells you that the intensity of competition is only going to increase in the telecom sector.
Yeah, of course, we have been seeing this trend for the last 1.5-2 years. But again, one has to look at the fact that I think this one industry is actually done a lot of good for the country from the consumer's point of view. And this one industry has actually increased the penetration to every nook and corner of the country. Therefore, one has to look at this industry, whether it should be pushed to this kind of level at which we are seeing it today, or the industry has to see a stability in terms of their pricing power, as well as the consumer, the large benefit they will get, and ultimately look at actually the longer term sustainable this business. I think the way we are seeing actually the last 6 months, we have seen a reasonably good amount of consolidation that has come in these sectors. From 7-8 players now is becoming about 3 players. I think with 3 players, definitely for such a large country, there is a space for the players to three players to be there. And from a consumer point of view, competition always good, but that should not come at the cost of their profitability. I think somewhere my feeling is the industry will see actually a time where some kind of consolidation which has already happened ultimately will start leading to a better balance sheet management, and which in turn actually will also help the companies from the longer term survivability point of view as well as from the pricing point of view.
I'll tell you what has changed in my book. A couple of years ago, we had this whole theory of missed call dene ka. Now that prices have come down so low, nobody gives a missed call. If somebody calls me, I just pick up the phone because I know incoming is free.
Absolutely.
So in terms of an approach,
and now most of your outgoings are also free.
Exactly.
So.
But would you be a buyer in telecom stocks? Are you of the view that from a market standpoint, from an investor standpoint, you're buying them at the peak of the bad news?
Yeah, I think if you
purely the stock investor.
Yeah, if you go deep, definitely there is a value. I think it's a sector which has got a huge entry barrier. Yeah. There is no question. I think the investment that is needed for this sector is also very huge. Unfortunately, the current crisis that they are going through in terms of the pricing, that's also, I think, somewhere down the line has to come into a forum where it gets stabilized. Therefore, actually reverses the whole trend that we have seen in the last 3-4 years. While there is a deep value in these companies, as you rightly mentioned earlier about for Bharti, I think what is hurting them actually is the high level of debt. And wherever this high level of debt is there and if it's not getting converted either into an equity or is not reduced actually quite significantly, then value unlocking will take a lot of time unless we actually see the revenue projections getting better as we move forward. Therefore, from a money manager's point of view, while of course we do have a close watch on these sectors, especially stocks like Bharti and all, we have been watching it very closely, but we don't have actually still a significant ownership given the headwinds which are still not favorable at this point of time for the sector.